Let's bring in Scott Bauer. I want to get his take on the numbers. Again, non-farm payrolls coming in 142,000 with a revision to last month's number. Lower, Scott, it looks like this one came in a little bit below expectations, but judging by the market's reaction too, nothing to really raise concerns.
No, this is a really good number for the market. I look at this and the 142, I had seen some expectations around 140 as well. So I know 160 was the big one that was out there. But when you look at the other metrics here, you look at unemployment. I didn't see the wage component yet. Maybe you have that. This is one that the market needed to see, Ben, and the Fed probably needed to see as well, because what this does is it takes a little edge off of all of this rhetoric that's out there that they need a 50 bip cut in 2 weeks instead of 25. So even though this might be a little bit light, I think this is still a really healthy number here. Now, we don't know how the market is going to react by the end of the day today, because we've been in this cycle here where, just a few months ago, we were looking for weaker numbers. Now we're not looking for weaker numbers, so we don't really know how the market's going to react. But I think overall, this should calm the markets a little bit.
Well, maybe that's what we're seeing, Scott, because I mentioned we spiked up to 55.05. We're right back at 54.88. I mean, maybe this is a market that is, again, content with this, but it's not necessarily going to tip the scales one way or the other, unfortunately. I'm looking again at non-farm payrolls, 142,000, so that's just below the 165 that they were looking for. I got prior revised to 89. Participation rate flat at 62.7. I did notice manufacturing payroll, Scott, down 24,000. They were looking for an increase of around just under 10,000, it looks like.
That kind of goes right in line with the other eco data we've been seeing recently.
True.
So that what we're seeing is consistent. Yes, it's consistent on the weaker side here. This is something that you and I have talked about over and over for the last few months that maybe the Fed didn't see, because all of the Fed data that they make their decisions on, all of the eco data they're looking at is all in the rearview mirror as opposed to what's really happening out on the street. So yes, things overall are slowing down. Things are weaker. But this could have been a much worse number, in my opinion, here, given what the market was expecting here. I think we probably get a rally by the end of the day. I know we rallied, we sold back off here. I think the market's going to take this in and probably level off going into the weekend.
Okay, a sigh of relief, it sounds like. Scott, talk to me about yields. You've got some interesting activity this week, the 210, seeing that slope positive the first time in a couple years. We actually, looking at it right now, the 10-year at 3.67. It was at 3.69 heading into this number. So kind of a similar situation, right? Kind of hanging out right there, but something to be watched here.
Oh, there's no question about it. I mean, you look at TLT, which is the 20-year ETF, and that is rallying, and you see, bonds really rallying, yields come down here. The curve is not inverted really anymore. So, are we back some normalcy here? I don't know what normalcy really is here, but again, I really think this is, as good of a number that the market could have seen here. I really do. And what do we have now before the Fed comes out in a couple of weeks? We've got CPI next week, but at this point, I think that, they're pretty much going to have their meeting and they're going to have a decision. I haven't seen what CME FedWatch tool is pricing in yet, if the probability of a 50 bip reduction has increased or not. So I haven't seen that, but I still think 25 is really the one on the table.
Okay, I'm hearing a 43% for a 50, and we're hanging out right around 5,500 in the S&Ps, but I wanted to get a quick thought on gold, because we were talking earlier in the show about diversification, and under these circumstances, it looks like traders are doing just that, right? We're at 25.56 right now. We're talking 14 bucks off an all-time high.
No doubt about it, and that trend is going to continue higher. The one I think we all need to watch is silver, though, because silver in relationship to gold is still very, very inexpensive. Even though silver has rallied and come off of those lows here, that's the one I think we need to watch. But as we've said, Ben, you look at those gold and silver, any dip, you've got to be a buyer at this point. I wouldn't buy into a rally, but any dip, you've got to be a buyer.
Quick thought on Bitcoin. Scott's been struggling a little bit, kind of lagging the broader market, 56,775. It's up 1% today.
A lot of pressure in Bitcoin here. Still don't know if that's because of Mt. Gox situation, what it may be, certainly has not performed as well as gold has. And I think the bulls have to be a little concerned.
Yeah, a series of lower highs. You can see, take out the support we found a floor on recently. Open up the door below that 50,000 level. We could see some energy. Scott, thanks for sharing part of your Friday. I know it's a busy one. You gave part of it to us here on the network. We appreciate that. Scott Bauer, CEO of Prosper Trading Academy.